Hello everyone and welcome back to my channel. As of every week, we will jump into the fundamental, sentiment and technical analysis of different currency pairs to check the opportunities we have during the next week. Now, this video might be a little short because we have, especially me personally, I don't have much opportunities coming into the next week. But the opportunities that we will have during the next week, I will go dive deep in details about it. First of all, when we check right here the data, we can clearly see that from a fundamental perspective, the US dollar data is still the strongest. Although sentiment is the weakest, but from a data perspective, the US dollar is still the strongest. Pound is having a good fundamental perspective, fundamental data. Australian dollar also, and Japanese yen. So, from a fundamental perspective, USD, Pound, AUD, JPY, very strong data. Actual data is very strong, which I like to see. Why? Because Japanese yen, the Bank of Japan is looking to hike, so they are in a hiking cycle. US dollar, there is a lot of uncertainty, so they are pausing right now. Pound is pausing also. Australian dollar somewhat staying on their cycle, but they are in a hold. And the Swiss franc is looking to cut rate. For example, Canadian dollar is looking to cut interest rates, so there is interest rate divergence. That's why it's fundamentally very good to buy USD, Pound, Australian dollar and JPY against the Canadian dollar, New Zealand dollar, Euro and Swiss franc. Then we jump into the sentiment perspective. From a sentiment perspective, the US dollar is not having a great sentiment. So people are very afraid of uncertainty and growth to decrease and inflation to increase. So they have fear of going into a stagflation, which will hurt the currency. Although inflation is increasing, but because GDP is decreasing, it will hurt the currency of the country that has stagflation. Pound, from a different perspective, sentiment, Pound is having a great sentiment and a great fundamental. So it's very clear that I am hugely interested in buying the pound. Now, how do I know which pair I need to buy the pound against? So what I did right here is I made two sections, 4 on the left and 4 on the right. This way I can know from a fundamental perspective if it's a good idea to buy the pair, and from a sentiment perspective if it's a good idea to buy this pair. And this is how I can create trade opportunities for the next week. If we can see right here, we have USD, Pound, Australian dollar, Japanese yen, very strong fundamentally, and usually fundamental strength doesn't shift like on a weekly basis. Maybe data comes out very different, but it's usually shifted on a monthly or 3-month basis or quarterly basis. So sentiment, I would like to have the fundamental strength currencies to have a good sentiment. For example, right here we have the pound having good fundamentals and good sentiment, but other currency pairs are not suitable to be bought yet. Now there might be changes in the for example, Japanese yen sentiment or Australian dollar sentiment, which will boost the idea of the fundamental bullishness of the Japanese yen and the Australian dollar. And if it doesn't happen, I will not be looking to take trades on these currencies. So, an example, a trade opportunity that we could have during the next week is right here. We have the pound fundamentally strong between these four. Okay, even if it's on the fourth rank, it's totally normal. I just need it to be on the left side and on the right side. So pound on the left side, so strong. Also sentiment strong on the pound, so we need to buy the pound. Now, how do I look the weakest or weaker currency to buy the pound against? We have the euro. From a fundamental perspective, euro is still weak, so it's ranked 7 on my strategy. Okay, so maybe different strategies will look at euro as very strong, but from a fundamental perspective, the euro, in my opinion, is still weak, and from a sentiment perspective, it's somewhat weak. Okay, so this idea, euro being on the right side and pound being on the left side, will give me a trade opportunity during the next week to buy the pound and short the euro dollar. So the pair that I will have opportunity on is the euro pound. So I would like to see euro pound from a technical perspective now to retrace into an area where I see price is good to enter a short position. After we analyze the fundamental sentiment and final rank of currency pairs, and I had the pound euro as currencies to trade during the next week, now we will jump into the technical analysis of euro pound and see which opportunities and what days we have in order to trade this pair. Now, when we jump into the euro pound pair, we can see, first of all, we are in a good area to buy from. So we are above daily moving averages, so or around it, 100 and 200 moving averages. So it's a clear way that this area is a good price to buy from. Now we dive a little bit deeper. We have the RSI above 50%, okay, and we have a clear supply zone. So right here we have a shift in market structure. So this shift in market structure created for me a supply zone that I will anticipate price to reach before continuation to the downside. Now you can tell me that we have a great move to the upside here. This great move happened because of the election in Germany, which was won by the right wing, and rumor came that because the right wing won, there will be prosperous, so GDP will increase, also inflation will increase, but mainly GDP and labor market will get better. That's why we saw this higher move to the upside, and I benefited from it on the euro and SD trade. I longed euro and SD a couple weeks ago when there was election, and I got 80% return with an initial risk like 2.5 or 3%. It was a 1 to 5.6 risk to reward ratio. Very great. Now, what I would like to see is retracement into this area right here with economic indicators supporting the fundamentals and sentiment of this pair to be bearish. After this data comes out, I will go into the hourly time frame. I will need to see shift in market structure in order for me to take an entry to short this pair to the downside. So after anticipation of retracement, what we need to see we need to check the economic calendar. And right here I have all the data that will come out in the next week. So on Monday I'm interested in euro and pound data, but I look at all the data because I input it right here to have my strategy results. What I will be doing is euro at 11 a.m. It doesn't matter how it comes really, because at 11:30 a.m. local time we have the pound data, which will play the biggest role in implementation of euro pound short position opportunity. At 11:30 a.m., because we do not have any other day that we can take another trade opportunities, if I take the 11:30 a.m. trade opportunity and data aligns with the fundamental and sentiment analysis that I did during the weekend, there is no other opportunities to be taken. Now, if pound on Monday came out negative and euro came out positive, and from a strategy perspective I'm still short on euro and long on pound, we will wait until Wednesday to see inflation. If inflation comes out positive for the pound, I will look to take a short position. Or if I take the 11:30 a.m. local time on Monday the trade, Tuesday we will have a 24-hour for the data of previous day and the fundamentals and sentiment strategy to play out for the whole 36 hours, which will come into the inflation data on a very tight stop loss around break even. So if inflation data comes out negative for the pound, I will look into getting out of the trade if I'm still in it, and if it comes positive, it will move in my directions and I will move my stop loss based on the hourly time frame. Now, in order for me to have a good opportunity and a great risk to reward ratio, what I do is I start anticipating where price might retrace to and what are the ideas that I will be looking to take. So for example, right here we have this high and also have this moving average, and we have right here a high. So maybe the RSI will come out into the 70s areas, into this area right here. Then we shall see something like this, then break, then retracement. So what I will be looking at is shorting around the 50% of the shift in market structure right here, let's say right here, and then my stop loss will be, let's say, like this. Okay, maybe somewhat different, and I will be looking not just to target, let's say 1 to 4, 1 to 3 or something like this. My target will be the lows right here. So every single trade, now when we go into the trade updates, you shall see that my initial target is around 1 to 10, 1 to 7, 1 to 6 risk to reward ratio, nothing less. So I don't, if there is a trade that has a potential of 1 to 3 risk to reward ratio, I will not take it. So the potential risk to reward ratio needs to be around 1 to 7, 1 to 15, 1 to 10, and maybe I will close it at 1 to 3 risk to reward ratio, but the potential move needs to be very big. Now, after we finished from the trade opportunities that we have during the next week, we will jump into the trade opportunities that I took during previous week and what it resulted in. First, let's start with the losing trade that I took. Right here we have the NSD CAD, so New Zealand dollar, Canadian dollar. Based on my strategy, it was a short position, so shorting NSD, buying the Canadian dollar. As I told you before, shift right here, entry, stop loss. After break of structure, I moved my stop loss into this high right here, and what happened, that data came out positive for the New Zealand dollar, and after data came out positive for the New Zealand dollar, I was asleep and I got stopped out. If I was awake, I would have closed my position after data coming out positive for the New Zealand dollar because it doesn't support my trade idea. The Canadian dollar data right here came out positive. That's why I put a sell limit order right here and I got a little bit of the move. Then I got stopped out after NSD data came out positive. Right here I lost around 0.5%. So my initial risk was 2%, and after I trailed my stop loss, I lost 0.5%. Now let's jump into the winning trade idea that I took. Right here, it was on the CHF JPY trade, and I closed it after data came out negative. So I closed it right here. Okay, so data came out negative for the Japanese yen, which triggered me to close the trade. Okay, because I'm not willing to risk the retracement to the upside. What happened right here? So data, previous day interest rate decision 0.5. After data came out, so actual even lesser than forecast, very higher than the previous. Also, it did not affect the results of my strategy. So JPY was still very strong, Swiss franc was still very weak. That's why after shift in market structure, I waited for retracement. If you can see right here, this is around 50% retracement. I put a sell limit order, I put my stop loss, and my initial target was right here, 1:7 risk to reward ratio. But because of data coming out negative for the Japanese yen, what I did is I closed my position at a 1 to 2.8 risk to reward ratio. Now my initial risk was around 3.5%, 4%, and I made right here like 13% profit. It was a little bit higher than 4%, but after break to the downside, my stop loss immediately moved to the break-even entry, and then I trade my stop loss right here. After data came out negative for the Japanese yen, I closed my position, which resulted in 13% profit. So the total profit for this week was around 12%, but I do not calculate the profits like this. So if I go into my tracker, I'm trading in a very small account because I am getting data right now. So I will get data for the whole year to see if my strategy is profitable or not, and if I can increase my capital in order to start having good return on my capital. So if we go to start right here, I'm being very transparent just because this is the way I like to be. So right here are all the trades that I took during the 2025. So my initial capital on 2025, on 2024, even just 3 months before 2025, I've had a $100 account and it got all the way down to 57.82. Then on January, made small profit. February was a very strong month, although I could have made more, like I could have made around 50%, but I was not sharp in trailing my stop loss and moving and following the economic indicators and taking sharp decisions, fast decisions. That's why I did not make the $13 plus. And now on March this month I'm up 14%, and there is 1 week, if we take the euro pound opportunity, I might get up 20-25%, God knows how much, and I will keep going like this until the end of the year to see if my overall strategy is profitable or not. So if we go to the dashboard right now, you can see that my win rate is 36.8%, so it's below 50%, but if we jump into the risk to reward ratio, my average risk to reward ratio is 5.56, so very high risk to reward ratio. Hopefully I'm aiming to have a higher risk to reward ratio, know how to manage my losses better and how to take better opportunities. I'm trying to be sharp as much as possible. In this way I can minimize my losses, increase my profit, and I don't even need a 50% win rate, but if I get into the 50% win rate with a 1-to-6 risk to reward ratio, I can make good amount of return on capital. So this is everything for this video. Hopefully it was insightful. If you like this type of content, don't forget to hit the like button and subscribe for weekly analysis like this. Until the next week, stay safe.